Okay, Realtor.com has just changed their entire prediction about what's going to happen in the housing market in the next 6 months to a year. And we're going to go over that today because it will give us a tremendous amount of insight. So if you're investing in real estate, wanting to start investing in real estate, or buying or selling just in a residential fashion, then this video is for you. I'm Stephen Clark, flipped about 100 houses and sold about 200, so I'm gonna give you my unique perspective about what they said today and what this means for you. I just recorded this for 20 minutes and the camera ran out of film or whatever, so we're gonna try this again. So first of all, let's see what they said. Now, Realtor.com has changed their predictions from that the housing market will increase 5.4% on the home prices this year, and they said, we're going to take that back. It's not going to do that. It's actually going to just, if anything, be down 0.9%. So that is a huge recalibration of what they predicted. They also said rent prices, as opposed to going up 6.4%, are actually going to go down 0.6% as well. So both their rising home prices and rising rents have now been decimated, and they said if anything it's going to lose value. So that actually puts them more in line with the other economic offices in Zillow, Trulia, and Redfin. All those have predicted a leveling off, if not a little bit of a decrease. And Realtor.com just got into it as well. So what that means, if you are looking to buy and sell real estate, is that you probably won't get any sort of relief by staying on the sidelines. Now, I think a lot of people thought that since interest rates were being hiked so much, that housing prices were just going to decimate and crash, and then they're going to be able to swoop in and buy up a lot of stuff. According to all these major realtor and housing economic teams in Zillow, Trulia, Realtor.com, and Redfin, they're saying that's not the case. You're not going to be able just to swoop in if you wait. So that means instead of trying to time the market, it might be good just to get into the market and spend some time in the market. Okay, so the second thing that means is that if you were waiting for rents to fall in order to decide if you should keep on renting or if you should move up and try to buy, you're not going to get any relief there either. It's probably going to be the same thing you've seen for the last 2 years. Just instead of a acceleration of growth, you're just going to see everything kind of flatline with rent prices. Now, rent prices in the last 2 years have gone up, of course, but they haven't gone up as much as home prices. So if you were looking to jump into the real estate market, I still think now is the time. I know people are worried about interest rates, but we've seen the Federal Reserve Board with Jerome Powell actually freezing the interest rates hikes, and he's probably going to pause it for this time and the next time, which means that we're getting closer to where they want to see the bottom. They want inflation to be at 2% as opposed to 7%, and they think they're getting closer to that. So there's going to be a couple more interest rate raises or whatever in the future. But if you're worried about jumping in right now and getting an interest rate that you can't afford, is going to make your price too high, just know that you buy and marry the price, but you flirt with the interest rate. So if you're worried that 7% is going to be too high for you or whatever, just know that in maybe 2 years you'll be able to refinance, or 1 year you'll be able to refinance. Or if you buy something that needs a significant amount of work, you can go and do that and refinance almost immediately. So if you are looking for some coaching on there, I do coaching. It's fun for me to talk to people about real estate because I can talk about real estate all day long. And so it's just nice to have other people do it, because if you do it on a date or at a dinner party, you lose a lot of friends and you don't get callbacks on the dates. So swclarkes@gmail.com, that's in the description below. And if you're buying or selling, need a second pair of eyes, or just want help figuring out how to make some money in real estate, I can help you with that too, because I've done that for a long time. So that's if you're kind of buying and selling. Now, also, if you're looking to invest in real estate, you really need to know that what's happening right now is a bifurcation of the US map in terms of home prices. Even though all 4 major publications say home prices are going to level out, that's across the board. And there is a crazy thing happening in real estate right now where the left side of the United States, which is the West Coast even a little bit of Texas, Austin, etc., are losing a lot of home value. San Francisco, Los Angeles, San Diego, a little less so, Phoenix. All these really popular places during the pandemic and over the last couple of years are losing a lot of value. So on the left side of the United States, you can see things losing up to like 10% of value already. But it's completely different on the right side of the United States. On the right side of the United States, you see increases almost as much as you see the decreases. So on the right side of the United States, you see home prices going up 8%, 5%, 10%, maybe even 12% in some places, some markets in the Southeast, in the North, especially in Florida where I'm at right now, in Miami. So you see that happening, which means that there's still ways to make money in things like house flipping. Now, a Zillow economist came out last week and said that you should switch your strategy to buy and hold right now based off this economic time. And she said that house flippers are not going to be making any money in 2023. Complete BS, because it is so different on the East versus the West Coast. Now, if you're on the East Coast and you want to be a house flipper, having those 10% increases in value actually helps you get into the market without being an expert, right? So if you're a beginner, I would still encourage you to jump into this market right now and try to flip a house if you're on the East Coast in one of those states, because you're going to have a 10% kind of safety net, right? The house prices are still going up so much. You're going to have a little bit of a safety net. You don't have to be an expert. You don't have to be so good if you have those positive appreciations. And another way, of course, that you can kind of help mitigate some of your risk if you're scared about that would be to get a coach or reach out to someone like me or whomever and ask for advice, because people are gladly able to give you advice, and most of them are just super happy that you asked. So that's a plus. Now, if you want to do buy and hold, I would still encourage you to look at it. It's going to be a little trickier now because interest rates are so high, so it eats up your margin. Not something for me right now, but there are good deals out there. What I think is for me right now, and is for a lot of other people, would be getting something and short-term renting it, which would technically be a buy and hold, but when people say buy and hold, they usually think about long-term rents and going from there. But an Airbnb could be a great thing for you to do. There are excellent loans that will help you Airbnb. There's FHA loan, which is a typical home buyer loan, and you can get multifamily in that, which allows you to Airbnb potentially based off of your geography. And what else you can do is a DSCR loan. I believe that's what this is called. They're kind of generally new loans. I've seen them used a couple times already, which is pretty cool, but they're kind of investor-friendly loans. It's less about you as a borrower. It's more about the investment and if the numbers work, etc. So there is still a lot of potential in Airbnb. There's still a lot of potential in making money in real estate right now. You just have to know how to play it and have to be a little more cognizant of the trends right now. I do think that you can still employ your FHA loan if you're just looking to buy for yourself and get out of renting. You can apply and get an FHA loan, and you can maybe buy a duplex or a triplex or a quadplex and rent out those other places if you're looking and if you are really pretty tight on that budget. It's also a wonderful thing to do to buy a duplex or a triplex if your area allows it, because then you'll never have to pay your mortgage, if you get it right. But even if you get it wrong, you will have a significant lower mortgage than you would if you would just have bought it for yourself. Buying a house for just you to live in is something that a wild amount of real estate investors don't do, or they do it after they own a couple other pieces of real estate. It's really funny because when you first think about buying a house, you think about a house, you and your family, and it's happy, and and it's a good investment and all that stuff. But a huge amount of money gurus and real estate gurus actually buy their house that they want to live in for themselves after they've already purchased some investment property. So it kind of seems counterintuitive, but it's a really, really good strategy. Or there's that hybrid strategy of buying the house that you kind of want, that's a duplex, and then renting out one side, renting out the other side. I have a buddy here in Miami that's doing that right now. And it just allows him to really, really live for free, which is pretty cool. So that's kind of where we are with the kind of economic market housing conditions right now. I think the crash that everyone was hoping was going to happen, or lots of people were hoping was going to happen, is not going to happen. I think that since Realtor.com switched up their forecast, it doesn't make what everyone else said right. It doesn't make Realtor.com, Zillow, Trulia, everything else right. But what it does is it gives us a higher percentage of potentially being right. So instead of saying, well, all these people said this is what's going to right, this is what's going to happen, so this is definitely what's going to happen, that's not true. But what it does do is it says, okay, all these people are coalescing around the same numbers. So instead of it being 100% right, maybe it is going to be potentially 80% right? So that means if you roll the dice 80% of the time, you're going to have that outcome. But 20% of the time, you're not going to have that outcome, which doesn't mean that you played the hand wrong. It just means that you fell within that percentage of the outcome where it wasn't optimal. That's actually a strategy from the book Thinking in Bets that Andy Duke wrote, which is a really great way to look at life. Instead of there being an optimal strategy that's always going to work, there's a strategy that has the highest percentage probability of working, and that's what you really got to look at. So if we do all these things and we do expect home prices to level off and we make kind of money moves and financial moves based off that, and it doesn't turn out right, it doesn't mean that we were wrong. It just means that we fell within that probability of it not being right. Kind of something to think about, kind of trippy, but it's a really great mental model to look at investments and also to look at pretty much anything else in your life. So more housing news on this channel every day. We do shorts every day, and we do long form content every other day, a couple times a week on here. Real estate's really the passion, so I love talking about it. If you want more information about this, like and subscribe to the channel. Thanks.